Hi, everybody. Welcome back to 3 Minute Success. I am your host, Jarrod Music from Entrepreneur Aligned, back with you again. Here today to talk about tax planning versus tax compliance for entrepreneurs and small business owners. So most of us tend to focus on the compliance element. That is the raw Brussels sprout that we just have to eat, that nobody likes, but we're happy when it's done. It's getting the right numbers onto the right forms, getting them filed, and making sure that you don't get in trouble with the tax authorities. Everything that we read tends to be about tax compliance because 91% of families are employed. You have W-2 income, you have 1099 income. Your ability to dictate the recognition of that income is limited. When you're an entrepreneur, you open up those gates, right? You can choose in what tax years do you recognize certain amounts of income? When and how do you choose to take on new expenses? How do you structure the entity of your business? How do you structure your agreements? How do you structure your capital stack? Are you utilizing more equity raising? Are you utilizing debt? How are you putting all those pieces together? Each one of those little micro decisions creates a cascade of different taxable outcomes. So when we talk about tax compliance, we're really talking about multiple years in the future, looking at how do I optimize my tax strategy so that I'm paying what I'm legally required to pay. Absolutely. But I'm doing it in a smart way where I've forecasted, I'm never surprised, and I'm holding that amount to the minimum. So when we're thinking about this, a couple of keys to keep in mind. Do you have a compliance focused or a tax planning focused firm? Ask them questions like, who's your ideal client? Who do you not work well with? What's your philosophy on multi-year tax planning approaches? And then after they've done a preliminary review of your tax documents, which is what any good CPA firm should do, what opportunities do you see based on your work with other companies similar to mine, right? You should be able to get immediate value there and understand, do they have a vision for how we can run this tax picture together to create the outcome that we're looking for? Second piece, if you can bring your CPA firm in once you found the good one as early as possible, preferably before you've even formed the entity. Should I be a C Corp, an S, an LLC? Should we do something else in terms of our capital raise or our capital contributions? Great times to bring those CPA firms in. And then third, when you're looking at your exit strategy over multiple years, how are we going to do this so that we can optimize not just the capital gain recognition, but also our recognition of income and use of expenditures along the way? So tax planning, definitely not the raw Brussels sprout. Maybe it's that slice of pizza that makes your life a little bit better. Thanks so much. Be back soon.